Hey friends, welcome to the Singapore Market Digest for May 2nd, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. Let's kick things off with a quick look at the overall market sentiment. While the article doesn't mention the Straits Times Index directly, the tone across key stocks shows a mix of cautious optimism and sector-specific stories. We're seeing some companies bucking the trend with positive updates, while others are facing challenges from both local and global factors. First up, let's talk about Capitaland Investment, or CLI. If you're not familiar, CLI is a major real estate investment manager in Singapore with a presence across Asia and beyond. Their ticker is SGX, 9CI. CLI just reported first quarter revenue of $496 million, which is down 24% from $650 million a year ago. Now, before you get too worried, most of this drop is due to something called deconsolidation of Capitaland Ascot Trust, or CLAS. Basically, CLI sold a 4.9% stake in CLAS back in December for $162 million, so they're no longer including CLAS's numbers in their revenue. If you adjust for this, CLI's revenue is actually flat year on year, showing some stability in their core business. Investors seem to like the clarity, with CLI shares rising 2.6% to $275 ahead of the business update. This suggests the market is comfortable with the company's direction and the way it's managing its portfolio. Next, let's head over to the electric vehicle space with Nio, the Chinese EV maker. Nio isn't listed on the SGX, but it's a name many local investors follow closely. In April, Nio delivered 23,900 vehicles, up a whopping 53% from the same month last year. This includes cars from their new Firefly brand, which focuses on small, smart, high-end EVs, as well as their premium Nio brand and the family-oriented Envo brand. Firefly just launched in China in late April, and Nio says they plan to take it global soon. Despite these strong delivery numbers, Nio's shares actually fell 4.2% to $14. This could be due to broader concerns about competition and profitability in the EV sector, or simply profit-taking after recent gains. Still, the growth in deliveries shows that Nio is pushing ahead in a crowded market, and the launch of new brands gives them more ways to reach different types of customers. Switching gears to real estate investment trusts, let's look at Mapletree Industrial Trust, or MIT. MIT is a major player in the industrial and data center space, with properties in Singapore and North America. Their ticker is SGX, MEAU. For the fourth quarter, MIT kept its distribution per unit steady at $336, the same as last year. Revenue dipped slightly by 0.5% to $177.8 million, mainly due to some leases not being renewed in North America and the sale of a cluster of factories in Tanglin Halt last March. Even with these headwinds, MIT has managed to maintain its payout, which is a positive sign for income-focused investors. The units closed down 0.5% at $2 before the announcement, suggesting the market had already priced in a relatively stable result. In the broader context, industrial REITs have been facing some pressure from rising interest rates and changing tenant demand, but MIT's ability to hold its distribution steady is worth noting. Now let's talk about Jardine Cycle and Carriage, or JCNC. This is an investment holding company with a diverse portfolio, including a big stake in Astra, a conglomerate in Indonesia. JCNC's ticker is SGX C07. For the first quarter, JCNC reported lower contributions from most of its business units. Astra's profits were hit by a weaker Indonesian rupiah, which affected the bottom line when converting earnings back to Singapore dollars. However, there were some bright spots. Astra's financial services arm did well, with higher earnings thanks to a bigger loan book and strong growth in vehicle financing. The agribusiness segment also benefited from higher crude palm oil prices and increased sales volumes. JCNC shares edged up slightly by $1 to 25.93, reflecting a mixed but not disastrous set of results. This shows how currency movements and commodity prices can have a big impact on companies with regional operations, even if their core businesses are performing well. Finally, let's check in on iFast, the digital bank and wealth management platform. iFast ticker is SGX AIY. The big news is that iFast Global Trust Arm, which is based in Singapore, just received a trust business license from the Monetary Authority of Singapore. This is a significant step, as it allows iFast to expand its wealth management offerings, covering everything from helping clients grow their wealth to planning for legacy and preservation. Shares of iFast slipped 1.3% to $6.22 on Wednesday, possibly reflecting some profit-taking or broader market caution. Still, getting this license puts iFast in a stronger position to compete in the fast-evolving fintech and wealth management space, which is seeing increased demand from both retail and high-net-worth clients. So, to wrap things up, today's market action highlights how company-specific developments are driving share price movements on the SGX. We've seen Capitaland Investment steady the ship after a big portfolio move, Nio charging ahead with new brands but facing market volatility, Mapletree Industrial Trust holding payouts steady amid changing tenant demand, JC&C navigating currency swings in its regional businesses, and iFast expanding its capabilities in wealth management. As always, the market is a mix of challenges and opportunities, and it pays to keep an eye on both the big picture and the company details. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.